This is one of the hardest things for you to understand about trading, like one of the hardest things to come to terms with. And especially I saw quite a few guys talk about this, like Dan McAvoy talk about this. There is a tax you have to give to the market. In the same way that when you go to university, you have to pay that university fee so you can get a job. And the same is incredibly relevant to trading. And not investing as much if you're buying mutual funds and ETFs and the index funds, right? But when you're willing to risk to outperform the market, make more than 8% a year, 12% a year with trading, because that's possible on low equity. I'm not talking billions, but like millions. Obviously with a lot of edge. There is a adoption and application phase. In that adoption and application phase, if you're not trading paper currency, paper accounts, you will lose money. Like, you will lose money. That is something you need to come to terms with, because if you lose money straight away and you give up, then what's the point? Now, obviously, there's a caveat. If you just keep losing money forever, then obviously it's not a good idea, is it? Every time you lose, you need to learn why you lost and change the behavior that led you to lose that money. That's the point. Failure is the only way you learn. Like, if everything was easy, then you wouldn't bother trying to change. So failure is the only way to improve. And that failure, whether it's real or fake money, is a lesson to learn. And so when you do go into trading and start learning and think it's going to be some easy money printer, it is not. It is multiple years of consistent progress through multiple years of failure. And the same applies for business, the same applies for everything. Learning any skill is exactly the same.